This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November 22nd, 2013. Our time is 8:44 Mountain. Radio show runs on your favorite radio stations. Should note, next week in Edmonton, on 6:30 CHED, we are on prior to the hockey game at 1:30. Normally we run 3 o'clock. We'll be on prior to the Edmonton Oiler game at 1:30 next Sunday. If you ever miss a radio show, they are archived on Harold's websites, HESradio.com, RareColoredDiamonds.com. We have a podcast as well through iTunes. Go to iTunes, type in World Financial Report on Radio. You'll find the radio shows there. Harold does daily market commentary on his website. You'll find the commentary on the podcast site as well. Another interesting week. I was part of a banking seminar. I was one of the people that showed up on Monday night. Worldwide Precious Metals invited everyone in Edmonton to come out to the banking seminar. It took me an hour and a half to get to the seminar because it was a blizzard, but we had a packed house, and the information was outstanding. We'll talk about it a little later in the show. Also this week, Ben Bernanke spoke and talked about tapering very soon. That's why we saw some of the pullback we did in the hard asset market. And a couple of weeks ago, we had the pink diamond selling for $83 million. We had that orange diamond selling for $35 million. We have auction results we will go through, and a story from the New York Times about colored diamonds and why people are investing in them later on in the show. But Harold, we'll talk about the banking seminar. It was a bit of a journey to get there because of the blizzard, but it was more than worth it to attend. Lots of great information. I encourage people when they go to Toronto, come back to Edmonton and go to Calgary and put on this seminar, get your name on the list. We'll talk about that a little later in the week. But Ben Bernanke coming out once again this week and pulling the markets back. He's sort of schizophrenic. 1 minute he's encouraging, the next minute he's not, and we see the markets being whipsawed back and forth.
Yeah, and it was a rough week actually in the metals. In fact, we saw one down day on Thursday, but the market was down over $30. So again, obviously not happy with that because they just continue to play with this market. But all in all, we're very close to two major support levels. 1240 is a very heavy support level for gold. We're trading right now at 1246. It's up $3 on the day. And then the next heaviest level for gold support is at 1180, which is about $60 from here. So I feel that we're very close to the bottom of the market, but obviously it's getting very discouraging watching the metals trade this way because they're not reacting, to the fundamentals in the market. And basically, again, there's a lot of prognosticators, a lot of analysts out there that have their own opinions on gold, but a lot of people are getting very disgusted with the way that they're allowing this gold market to trade. The fact is that a weak U.S. dollar is supposed to be very bullish for gold. It always has been. Back, again, as far as you go in history, as long as gold and silver have traded on the market in relation to the U.S. dollar, that is one of the major things that we've always looked at as far as predicting the price of gold. That was the strength or weakness of the U.S. dollar. Back in 1990, when the U.S. dollar was the strongest currency, gold was one of the weakest commodities at $250. But then reverse that, in 2011, the U.S. dollar was the weakest currency at 72.5 cents, and gold was up to $1,920. So, again, as the U.S. dollar continues to weaken, gold should be moving up, but they seem to be suppressing the price for whatever reason. And it appears to be, as stupid as it may sound, is that the government, the U.S. government, doesn't want people to feel that the U.S. is not advancing, that the economy is not getting better. And I can assure you, I'm a Canadian living in the United States, and things are not getting better. In actual fact, the only thing that is going up is the stock market, and that's primarily because they're putting $85 billion a month still into the marketplace. Otherwise, the Dow would be sitting more likely in the 8,000 range. So, again, it's very discouraging to see that they're trading the markets this way. However, where we had a 12-year bull market in gold, and gold had gone from 250 up to 1920 before they decided to bring down the price by raising the marginal requirements. The fact is that gold was in a very strong bull market. You could depend on it. You could basically predict the next increase in gold and where the next support and resistance levels were, and we did that for 12 years very successfully. But in 2011, that one fateful week when they decided that they were going to end the bull market in gold, what they did is they raised the marginal requirements, the price of buying gold in the futures market so substantially for a week solid that they took all the sizzle out of the market. They took all of the leverage away. They made it so expensive even for the hedge funds to trade it, and then the traders started looking at other investments aside from gold, and gold fell from 1920 all the way down to 1180. So we're now sitting basically at 1246. The market is trading within a range on the lower end of the range, and basically what I see happening now is not the same bull market that we had back for the last 12 years. What I see is a market that has been played with so much and has been suppressed. And as I brought up on other shows, you've got a short-term trend and you've got a long-term trend, and the long-term trend for gold is still fairly very strongly intact. What isn't intact is the short-term bullish move in gold. So obviously we're sitting at the lower end of the spectrum. What I now see happening in gold is not necessarily a continuation of the past 12 years where we saw the market going up year in, year out for 12 years in a row. What I see is a potential gigantic spike in the market where we're going to wake up one day and we're going to see the market up in gold, $200-$300, and we're going to see the price of silver up $3, $4, $5. And basically what I'm now going to compare this market to is really 1980, with the last 3, 4, 5, 6 months of the market. And if you look at the chart, and if you don't have a chart on silver going back to 1980, I'll send it to you. But it was pretty well a straight line up where the price of silver went primarily from about $20 to $50 in a very, very short period of time. So that's what we're now looking at as a potential for gold and silver, that we're just going to see a shocking move in the market that's going to be fairly short-lived, and the market is just going to take off and run because, again, this market is like a spring. It's been suppressed. It's been pushed down, and eventually that spring is going to spring and it's going to fly. So basically, I don't think we're going to continue to see the 12 years that we saw prior where the gold market went up almost every single year. What we're going to see is an explosion in the price, and it's going to last a shorter period of time. So basically, you're not really going to have a chance to sit back and wait for it to happen, to wait for a confirmation that this is going to happen. It's just going to happen. And the reason that I believe that it's going to happen is that you've got two different major players in the market. You've got the players that are trading the paper market, and there's a distinct difference between paper gold and real gold, because we know that there's a shortage of physical gold and silver to the extent that people that are buying it physically are waiting a period of time in which to get it, number one, and they're paying a higher premium for buying it, number two. So the spread between the bid and the ask for gold and silver is very strong right now, and that's very unrepresentative of a market that is in a bear market, because if there was no interest in gold and silver, the spread would be much closer. The dealers would be looking to sell whatever they have in inventory, but that's not the case. The case is the exact opposite. There's people that are waiting for months and months and months to be able to get the gold and silver that they're looking for physically. So, again, it's a very confusing situation. How can there be a shortage in gold and silver physically? How can investors that are waiting a period of time to get it physically, and how in the world are they paying a much higher premium when gold is in a downturn? So again, I don't believe that what's happening in the gold and silver market is representative of what the real feeling is amongst the owners of physical gold and silver. Now, those that trade it, like the banks, they've got a totally different look at the market. They don't look at it as a hedge against inflation. They look at it as an opportunity to make some very short-term money on the downside, and that's what the banks are doing. But the majority of gold and silver is being held physically, and that's being held not only by people that feel that gold and silver is a fantastic investment and will not sell their gold and silver, but also countries. Look at how much gold that China owns. China owns more gold than probably any other country in the world. and they continue to buy it on every downturn. They continue to buy more and more. My feeling is that they are going to back their currency with gold. In actual fact, China is very discouraged with the United States. Where oil has always been traded in U.S. dollars, now China is actually settling their oil trades in their own currency. So they're getting out of the U.S. dollar, and they have every reason to do that. They owe trillions of dollars. The U.S. can't pay their debts on time. The U.S. is going to be $20 trillion in the hole, and their government shut down for 2 weeks. How bullish is that? Why in the world would anybody look at that scenario as being a bullish scenario? I may be crazy, but why in the world would anybody be investing in the stock market here in the United States when all those factors that I just outlined to you are present in the market right now? Government shuts down for 2 weeks. Lets 800,000 people go. They can't pay their debts. They have to raise the debt ceiling from $16 trillion to an unlimited amount between now and February. How in the world is that bullish? The other thing that was shocking was the article that came out from the New York Post that said that the government was playing around with the employment numbers. Well, we've all been saying that for years, but now they know it for a fact, and they did it just prior to the elections so Obama would get reelected. I mean, what they did, and the full article, you've got to read it, it's in the newsletter, it's absolutely shocking to think that this is going on at this particular point and that investors are okay with it. I mean, where is the integrity in the market anymore? Where is it that people look at a market and say, fine, if I'm going to risk my money, I want to know that I'm playing on a fair playing field? How can anybody be looking at the marketplace right now and say that they're playing on a fair playing field? That's why I'm not in the stock market. Most people I know are not in the stock market, and is more than likely a bubble that is getting ready to explode again, just like we saw in 2008. So I cannot say enough how risky everything is at this particular point, because again, nothing really makes sense in the marketplace right now. With gold being down to the 1240 level, it should be trading right now closer to 1700 just based on what the U.S. dollar is doing. Because in 2011, when gold hit 1920 and silver hit $50, the U.S. dollar was sitting at 71.5 cents, and now we're sitting at 80 cents. So it's not that we're that far off of the all-time lows in the dollar and the all-time highs in gold. The problem is that we should be sitting about $300 higher than we are right now, and that just isn't happening. So again, I believe that what is going to happen is that we are going to wake up to an exploding market like we did back in 1980, and the market lasted another 6 or 8 months, and the market hit highs at that point which were $850 in gold and $50 in silver that nobody felt was possible to hit. I think that we're going to still see 2,500, 3,500, 5,000 in gold. I believe the explosion in the metals is going to be substantial. It's going to take it way higher than the highs we saw back in 2011, but you're not going to get a really good chance to catch it, because when it really does take off, people are going to be chasing after the market, and the prices are just going to go higher and higher and higher. That's the way I see things happening, Randy. And again, at this point, again, a week like this was very discouraging due to the fact that the dollar didn't do anything. It wasn't that the dollar went up to 83, 84, 85 cents. It didn't do anything like that. So there was no reason that gold and silver should have dropped as much as it did based on basically no current events in the market that should have caused the market to do that.
Learn about why you should have precious metals in your portfolio. That is the goal of the company Harold recommends you use, Worldwide Precious Metals. Connect with them, 1-866-623-2002. They will educate you why you should have your own precious metals investment account. As well, you can go to their website, www.pmc.com, and they educate you through seminars. Bank depositors lost 47.5% of their money in Cyprus. Could a bail-in happen in Canada? Well, on Monday night and Tuesday in the morning, they had a free seminar in Edmonton. And yes, I'm not going to give away the entire seminar because I want you to go when they come back to Edmonton or go to Toronto or Calgary. but it's an outstanding seminar. And yes, a bail-in very, very easily could happen here in Canada. The numbers were on the screen. The way it was explained in a very black and white set of terms that yes, a bail-in could happen in Canada. Now, if you would like to go to this seminar, Worldwide Precious Metals will be coming back to Edmonton, Toronto, and going to Calgary with this seminar. If you would like to go, get your name on the list for 2014. Connect with Worldwide Precious Metals, 1-866-623-2002, the website wwpmc.com. And I can't stress enough, I do the show on a weekly basis and spend a lot of time researching all the information that we have. And I learned a lot from that seminar. In fact, it was eye-opening and shocking, to say the least, exactly what's happening, not only worldwide with money creation, but with the banking system in Canada and around the world. So I wholeheartedly endorse and say to you, go and check out this seminar when they come back to Edmonton, Calgary, and Toronto. wwpmc.com, telephone number 1-866-623-2002. And thanks to everyone that came out in Edmonton in one heck of a blizzard. John Embry from Sprout Asset Management. This is in our newsletter. You can get our newsletter from Worldwide or from Herald. Silver market update. He says, as you know, sentiment in the silver market is even more negative now than it was at the historic low set on June 27th. But nothing has changed on silver. People need to understand that there is a lot more demand for physical silver than there is actual silver coming out of the ground. Obviously, the people running this paper scam are going to every above-ground source in order to get inventory to keep the price from exploding. The fundamentals are so powerful in terms of supply and demand for silver, and when you superimpose on top of that the monetary debasement we are experiencing in coming years, I strongly believe that in the fullness of time, silver will be one of the greatest bull markets in the history of the world. You're talking about a price today of roughly $20 for silver, but you will see triple digits before this is over, and even way beyond that if things continue to unfold in a hyperinflationary manner. Last year, when the silver market was really tight, one of the buyers was J.P. Morgan. Some believe this has given them some ammunition to continue their paper takedown. But one of the things that is happening is that the COT, Commitment of Traders reports, shows that the banks, the very entities that have been conducting the suppression of gold and silver for years, are getting materially long at the same time the speculators are going very short. I think this is a precondition to an explosion in the price of gold and silver because once the bankers are long, they will have no problem with letting the price rise. The reality is that the fundamentals have been terrific. It's just been the bankers' takedown of this whole sector for the past 2.5 years that has created this remarkable opportunity. People need to understand that the fundamentals will eventually overrun the price suppression. At that point, the true price for silver will be revealed. I don't know what the number is, but it's a heck of a lot higher than what you see on your screen today. That from John Embry. Get our free weekly newsletter from Worldwide Precious Metals. Connect with them, wwpmc.com. Telephone number 1-866-623-2002. We send it out free of charge each week. You can go through it in 5 minutes or spend hours if you want, and you'll be completely up to date as to what's happening in the world financially. It's the companion to our radio show. And if you take a look through the newsletter, some of the stories this week that have come out, Ben Bernanke signals Fed target rate to stay low even after QE. So interest rates being low, that's a huge positive for gold, even if they do taper. As well, the Fed ponders how to taper without raising interest rates. Janet Yellen's labor gauge supports easier for longer policy. Once again, low interest rates, easy policies, monetary policies, positive for gold for a longer period of time. The Fed's Bullard says lower jobless threshold might be dangerous. Of course, they've said that the threshold is about 6.5% unemployment, and then they will look at easing and raising rates. He's concerned about that. PIMCO believes that, and they're a bond fund manager of the United States, that you're going to see low interest rates well into 2015. The Bank of England sees a case for record low interest rates beyond 7% job numbers, 7% unemployment. They said that at a recent meeting. Also, the United States Treasury has been forced to issue $1 trillion in new debt in the first 6 weeks of the fiscal year 2014. Between October 1st, 2013, and the first day of fiscal year 2014 and November 14th, they have, that's right, issued more than $1 trillion in new debt. And yet at the same time, we know that they're going to be in January and February dealing with the budget and dealing with the debt ceiling. And this is going to be a situation that comes up in the beginning of the year, Harold. We have about 2 minutes left in our segment, where Congress more than likely is going to, I don't think they're actually going to fight this time. I know a lot of people said that they think there could be a big battle. I actually think the Republicans are going to capitulate. They saw how bad they got hit last time, and they're just going to open up the credit card to a much, much higher limit, and that's going to mean the United States goes into even further debt, which is another positive for those sitting in hard assets as we are.
You bet. Eventually, it's got to kick in. I can just, because I read the same reports, Randy, as you're reading, and that's in the newsletters, and I can just feel the frustration of the analysts, because these are not run-of-the-mill. Some of these guys are brilliant. I mean, the people at GATA, for example, if you look at their history, these are brilliant people, and they know the markets. And I've been in business 35 years, and I've traded these markets, for all those years. And again, everybody's scratching their head because they just don't make any sense. However, there's a short-term trend and there's a long-term trend. And when the long-term trend kicks back in, we're going to see the results of, again, the suppression of these prices. It's like a spring. It's going to spring up. And again, I believe it's not going to be an orderly thing. I think we're going to see just a massive move in the market that's just going to catch everybody by surprise and take this market to levels that, we've talked about for years, but obviously at this point, people are concerned about. So I think that we're going to hold the support level, probably not 1240, but definitely 1180. And if we get down to those lower levels, it certainly makes sense to, buy more gold and silver at that point. But I do see these markets rebounding and coming back and making us, really look like we know what we're talking about. Again, I've been in business 35 years, and I've seen all types of markets. But again, I've never seen desperation in a market like we're seeing right now. We understand it, but again, let's see what happens in the near future. I'm still very convinced that the markets are going substantially higher.
One of the things that a lot of commentators, and you can read it in our newsletter, talking about art prices, diamond prices, you're seeing collectible cars, watches, artwork, all going for record prices. Even this crazy Bitcoin is going ballistic, and yet the gold market is being suppressed. That's why people are very, very confused as to why gold and silver are not doing what they're doing, should be doing. But the thing is that it will break out very, very soon. Connect with Worldwide Precious Metals, wwpmc.com, telephone number 1-866-623-2002. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November 22nd, 2013. Our time is 9:09 Mountain. Our radio show runs on your favorite radio stations. Also, the shows are archived. You can stream them online on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio. We are there. The show is portable. Harold does daily market commentary on his websites. You can find it as well right on the podcast site. And during the week, here in Edmonton, we had lots of snow. And the seminar for Monday night about the shocking truth of the Canadian banking system was packed. Considering it took me an hour and a half to get there, and a lot of other people were in the same boat because of the drive-in was bumper to bumper, and we had this blizzard. Thanks to everyone that came out and came out again on Tuesday as well. But I will tell you, if you did miss it, they will be coming back to Edmonton. They're going to Calgary and back to Toronto for this seminar about the Canadian banking system, the shocking truth. If you'd like to get your name on the list, speak with Worldwide Precious Metals, wwpmc.com, the telephone number 1-866-623-2002. And I really enjoyed the seminar. I thought it wasn't too long. It went through the numbers in black and white, explained things in very easy to understand terms. And when you realize what's happening out there in the financial world and all the derivatives, and as Harold has talked about, and Jim Sinclair, quadrillions of derivatives, the opportunity for an explosion, a blow-up in the financial markets is very real. And for those that have hard assets, if that happens, they will be sitting in a very good position. But I encourage you to give Worldwide a call and get your name on the list for when they come to Toronto, Edmonton, or Calgary. wwpmc.com, 1-866-623-2002. Harold's website for diamonds is rarecoloreddiamonds.com, and it was an outstanding couple of weeks for diamonds. We'll explain why here in a section. The featured diamond of the week, it's a 0.77 carat emerald cut fancy intense orangey pink. It is simply outstanding. We have the video of the diamond on the website. We have a picture of it in our newsletter. You can get our newsletter from Harold. All you need to do is connect with him, rarecoloreddiamonds.com, 1-800-432-1022. And this week, we have an outstanding article. The New York Times came out with an article, and it doesn't surprise me that they did, because everything is pointing to what this article is speaking about, a rising appetite to invest in colored diamonds. And Harold, I know that we'll go through the auction results here in a little bit, but this article is, we were able to find it yesterday, and it is simply outstanding.
It certainly is, and we'll send it. It's in the newsletter, and I just think it really sums up exactly what's happening in the diamond market at this time. And this is from the New York Times. And basically what you're talking about is obviously the biggest news, which were the three major diamonds that sold in the last couple of weeks. The Pink Star, the 59.60 carat oval cut, fancy, vivid pink, internally flawless diamond that they predicted would sell for $60 million, sold for $83 million in Geneva. Then you had that magnificent vivid orange, almost 15 carats. They thought it would sell for 17 to 20. It sold for $35.5 million. Then the week before that, you had that 118 carat D flawless that sold for $30 million. Now they're saying that 10 years ago, the stones would have made a fraction of this price. Talking about the orange, for example. So it's just the times. The fact is that people don't really trust the markets right now. They don't trust the stock market, the commodity markets, that type of thing. But something real that you hold in your hand that has value. Let's face it. If there's individuals out there that are spending $35 million on a diamond that was supposed to sell for half of that, when somebody is spending $83 million on a diamond that was supposed to sell for $60, that's not chump change. That's real money. That's substantial money, and they're not going to put money like that into an investment that is not going to go up in value. And the best example I can give you is what's also in this article. It says large diamonds have proven to provide good returns on investment in recent years. A 50-carat rectangular cut diamond was sold at Christie's in 2005 for $4.2 million. Came back to the market last year in 2012 and sold for double that at $8.4 million. And on top of that, to make it even crazier, it was bought both times by Lawrence Graff. He paid $4.2 million. Then he sold it for a higher price. Then he came back and bought it again for $8.4 million, and he said that it was an even better buy the second time. So how crazy is that? This guy bought and sold that diamond 3 times, and each time the price was higher and higher and higher. That's why I always say when you sell a diamond, you will never ever get a chance to buy that diamond back for anywhere close to what you paid for it. So that's extremely important. They're also going on to say, we can sit there and talk about, the expensive multi-million-dollar diamonds and say that that's out of our price range, out of most of our price range, and that's 100% true. But the bottom line is, it goes on to say in this article that there will always be a market for diamonds from the 1 to 10 carats. The 50 to 100 carat diamonds, you're looking at an elite buying field. Very few people have that type of money that's going to put up $85 million for a diamond or $35 million. Most of my clients that invest in diamonds invest under $250,000. In fact, a lot of our diamonds, our clients that invest in diamonds invest under $100,000. Now let's take a look at basically what happened with the auction this week. Because the fact is that the big diamonds sold. There's no doubt about it that, seeing the big diamonds sell for $85 million was spectacular. But again, that's not real for most of us. Who can even fathom spending $85 million on a diamond? But in the auction results, the big stones sold for close to what the estimates were. Looking at what the blue diamond sold for, it was supposed to sell for $6.2 million. It sold for $6.6 million. There was another blue that was supposed to sell for $5 million, and it sold for $5.5 million. So that's all well and good. But then start looking at the yellows. There was a big vivid yellow diamond that sold. It was supposed to sell for $2.7 million. It sold for $5,184,000. It was let me go over that again. Supposed to sell for between $1.7 and $2.7 million, and it sold for $5.1 million. It's not that they don't know what they're talking about at Christie's and Sotheby's. They do. They're experts at this. It's the times. People are paying fortunes because these diamonds never go down in value. They're the best investments that you could possibly make. Now, we have auctioned off in the past, and we have in our inventory, and we purposely made the featured diamond this week a fancy, intense, orangey pink diamond. Now, for those that look at an orangey pink diamond and say, well, gee, is that a good investment? It's not straight pink. It's got some orange in it. First of all, we know that the orange diamond last week sold for a record price. So orange is obviously a very desirable color and almost impossible to get. When you combine orange with pink, you get a very beautiful diamond. You could literally see the orange in this diamond. In fact, my wife has an orangey pink diamond that I could never sell because she will never let me sell it unless she saw the auction results of what just happened last week. Now let's look at it. There was an orangey pink pendant that was supposed to sell for between $76,000 and $108,000. If you're sitting down, it sold for $855,000. It was supposed to sell for top end $108,000. It sold for 8 times that amount, $855,000 on an orangey pink diamond. The next one that came up for sale, an attractive diamond ring circa 1905 that was supposed to sell for $92,000, and it sold for $790,000. Again, pink and orange in this diamond. Then you had another fancy orangey pink diamond that was supposed to sell for $201,000 on the high end, and it sold for $528,000. So this is what's happening in the diamond market right now. And if you look at the featured diamond, it's a fancy, intense orangey pink, but it's an argyle, and none of these diamonds were argyle. So you can imagine how much this diamond, that's the featured diamond, is going to continue to increase in price. It's a spectacular diamond. It's a very good size, especially for an Argyle, and that diamond is going to skyrocket in price. And the closer we get to the Argyle mine closing down, this diamond will take on a life of its own and make you more money than any investment diamond or any investment that you have ever made. There was a fancy yellow diamond that was supposed to sell on the low end $300,000, sold for $463,000. There was a pair of diamond earrings supposed to sell for between $272,000 and $300,000. $370,000 is sold for $450,000. There's another pair of earrings supposed to sell for on the low end $348,000. It sold for $423,000. But then there was a magnificent, intense yellow diamond ring. It was only 3.5 carats, and it was not flawless. Supposed to sell for $25,000, sold for $122,000. Basically, 5 times or 500% what the anticipated price was. Another fancy, intense ring supposed to sell for $76,000 on the high end, $50,000 on the low end, sold for $102,000. So again, we are talking about some of the greatest investment diamonds. And again, if you look at the lower price diamonds, the diamonds that were supposed to sell in the $100,000 range, those were the ones that sold for $500,000, $600,000, $800,000, and that's what we bring to you. That's always been what my business is. Yes, I have diamonds over 30, 40, 50 million, but again, very seldom do those diamonds sell. The diamonds that sell are in the 20,000, 50,000, 100,000 range. They're still affordable for most people that can invest in those type of diamonds, and when we go to resell them, to make 3, 4, 500% return on your money, again, it's one thing for me to say it, but it's another thing for it to be in black and white. And black and white in the newsletter this week is going to show the auction results, and that's exactly what happened. Again, Lawrence Graff buys a diamond for $4.2 million, sells it for higher than that. It goes back up for auction, and he buys it for $8.4 million. If that doesn't tell you what the diamond market is all about, I don't think anything will. So again, look at the featured diamond this week. It's a very large Argyle pink diamond. It's a 77-point emerald cut, which is a very rare cut, fancy, intense, orangey pink. It is a stunning diamond that will do nothing but make you money. And a lot of the diamonds that I got out of Argyle this year are the orangey pinks, and I was just ecstatic, Randy, to see the auction results, to see that I was right, and these orangey pinks are selling for a fortune, way, way more than what anybody ever anticipated was going to sell for. In fact, I saw the hesitancy when we had our last auction because we had a few orangey pink diamonds up there, and people questioned whether that was the right color combination, and now you know. Those that bought the orangey pinks at the last auction, congratulations to you, because, again, you're buying diamonds that we just proved sold for 5, 6, 7, 8 times what the estimates were at auction. So what we brought to you over the years, again, were phenomenal diamonds at phenomenal prices, because we make our money when you sell your diamond. We own 8 Seagull Fine Auctions, the only company of its kind, and we're prepared to sit back, let our clients, let these diamonds go up in value, and all make our money together. So we have some of the most amazing investment diamonds for you. All of our yellow diamonds are flawless. None of the diamond rings that sold at auction for fortunes last week, none of those diamonds were flawless. All of our yellows are flawless. So congratulations to all of our clients that own yellow flawless diamonds. Hold on to those diamonds for the next 10 years, and you're going to see a 3, 4, 5, 600% return on your investment, and these diamonds never, ever go down in value. I've got yellow flawless diamonds starting at $15,000 to $20,000. A $20,000 yellow diamond today, in 10 years from now, will be worth it at least $80,000, 400% return on your investment. I don't know of any other market that can give you those type of returns with the safety that you have in the diamond market, because again, there's maybe 100 to 120 yellow flawless diamonds available for sale in a year. We sell about 80% of those. And again, a $20,000 diamond today, these diamonds go up by 15% a year, and with high inflation, they've gone up as much as 400 to 500%. To talk about appreciation of these diamonds, back in 1980, you could have bought one for $500. Today, they're $20,000. That's how much these diamonds have gone up in value. I mentioned several times before Argyle pinks are the most amazing investments right now because the mine is going to close in the next 6 years. In fact, in the article from the New York Times, they talk about that. It's a very important factor that if you want to make a lot of money, buy a pink diamond. Buy a pink diamond from the Argyle mine, sit back for the next 10 years, and you could make 800 to 1,000% return on your money. In fact, the featured diamond this week will definitely sell next week. It's an orangey pink, but it's intense in color, and it's an emerald cut. A diamond like that can go up 1,000% in the next 10 years. So again, we're bringing to you some of the most amazing investments at a time when the whole investment market is on its ear. Most people can't figure out what to do at this point. So where does their money go? It's obvious. A diamond sold for $35 million last week. Another diamond sold for $85 million. If these were not good investments, people would not be buying them. Every single diamond that was auctioned off last week sold for more than what the estimates were. And the biggest returns were on the smaller diamonds, the ones like we've been saying for the last 6-8 years. Those are the diamonds for you to buy. Most of my clients are hard-working Canadians. They show up every day and they do what they need to do. We got great work ethic. We try to save our money and we try to do the right thing. The fact is that you put your money into the stock market because putting your money in the bank, you're getting 2% return. And judging by what the seminar was last week with Worldwide Precious Metals, they're talking about the banking system. The banking system's in trouble. What happened in Cyprus could definitely happen in Canada, and it could definitely happen in the United States and Europe. In fact, probably will. So if you're putting your money in the bank and you're getting 2%, which doesn't even cover inflation, and there's a risk of losing your money over the insurance value, why would you do that? Again, and what it's doing is forcing people back into the risky stock markets. Well, we always know that the stock market, when it gets like this, is going to fall. And it's the general public that buys in too late because they're looking to make some return on their invested dollar, and it's very difficult to do that. In fact, in the newsletter again this week, there was a report that Canadian real estate is overvalued by about 25%. So you can't put your money in the bank, you make no return, and it's risky. You put your money in the stock market, chances are excellent you're going to lose almost all of your money again, like 1999 and 2008. And then you got the real estate market overvalued by 25%. But in the meantime, we're looking at diamonds that are selling for fortunes in the market, and people are buying that because they're comfortable putting the money into an asset that maintains its value, that doesn't drop like stocks and commodities do. So basically, you've got an asset that is portable private wealth that skyrockets in price. We've proven that through these auctions, and you own it outright. It's in your possession. Look what's happening with classic cars, the same scenario. Cars that are supposed to sell for $50,000 are selling for 3 or 4 times that amount. Why? Because people are sick and tired of losing their money in the bank and in the stock market. They'd rather have fun with it. And the fact is, putting your money into a diamond and putting on your wife's ring or around her neck, or buying yourself a classic car or a beautiful piece of art is something that you can enjoy, as opposed to getting upset every time you see your statement from your stock account. So please get the newsletter this week. It's free of charge. Everything we do, basically, information-wise, is free of charge. Our radio show is free. Our seminars are free. Our online seminars are free. We will talk to clients on an individual basis and give you our input as to what's happening in the markets, and we do that on a daily basis. We get calls from people all over the world that listen to our radio shows, but mostly from Canada. I'm from Canada. Randy's from Canada. Most of our clients are from Canada. We take very good care of our clients, and again, there's no better investment at this particular time than the diamond market. And again, it's been proven again just by what we've seen as far as auction results go. I'm still a firm believer in gold and silver. I have not sold my gold and silver at all because I still believe exactly what I said today. We're going to see a gigantic move, but it's going to happen in a very quick fashion. So if you own physical gold and silver, continue to hold it. If you don't own it at this point here, in and around these prices are excellent opportunities to buy into that market. I think we're going to get a big spike in the market. But again, you cannot discount what's happening in the diamond market, because again, just looking at those orangey pink diamonds that were supposed to sell for $100,000 that ended up selling for $800,000, $600,000, and $500,000, those are real returns. Yellow diamonds that are supposed to sell under $100,000 are selling for $300,000, $400,000. those are the type of diamonds that we offer, except ours are of a very high value because they're internally flawless. None of these other diamonds compare to the quality of our diamonds, and we keep the price of our diamonds affordable so our clients can make the money. Again, we're content to sit back and wait the 8-10 years to sell off the multi-millions and millions of dollars that we have invested in Argyle Pinks and Yellow Flawlesses. And we're willing to wait for our clients to make their money for us to take our 10% of the profit. So, again, Randy, as you can tell, I've never been more excited about what's happening in the diamond market at this point. And again, look like we hit another home run in the pink and the yellow diamond market.
Featured diamond this week from rarecoloreddiamonds.com. 0.77 carat, emerald cut, fancy, intense, orangey pink. Get the auction results from Harold. We have Christie's magnificent jewel sale from Geneva, November the 12th. That's where that orange diamond sold for $35 million. The estimate on it, 17 to 20. We also have auction results from Sotheby's. That was from November 13th, 2013 in Geneva, Switzerland. And they sold that giant pink star, and it is now called the Pink Dream, I might add. They changed the name of it for $83 million. Go through the auction results. Get them from Harold. Connect with him at rarecoloreddiamonds.com. Telephone number to speak personally and privately with Harold, 1-800-432-1022. 1-800-432-1022, the website, rarecoloreddiamonds.com. And we have an outstanding story from the New York Times, A Rising Appetite to Invest in Colored Diamonds. This is an article you want to read. It is a must-read. And we also have an article that I put in the section, diamond section of our newsletter. Get our newsletter from Harold. It's actually Keith Barron talking about hard assets. And he goes on to say, I'll paraphrase things, he goes on to say that really the reason that people are moving into this market, the hard asset market, is because of massive printing of fiat money. And the wealthy are looking to preserve their wealth. They understand this is a warning of things to come, and the super wealthy aren't buying these hard assets because they're going to go down in price. These people are connected. They know that the end game is going to be around very, very soon, and they're moving extremely aggressively to preserve their wealth and their purchasing power by moving into hard assets because of what they believe is the great inflation coming. Get the newsletter from Harold. Connect with him, rarecoloreddiamonds.com. Telephone number 1-800-432-1022. Speak with him about our featured diamond, 0.77 carat emerald cut, fancy, intense, orangey pink. And Harold, we have about 3 minutes left in our show here. When I went through the auction results, I phoned you and I said, Harold, you're not going to believe some of the numbers. I fired them off to you. I said, these are simply outstanding. And I think anyone who wants to see them for themselves, you will be happy to send them out to them.
You better believe it, Randy. Again, just absolutely ecstatic at a time when, again, everybody's sitting back scratching their head and saying, what am I going to do? What am I going to do? You know, a market that we brought to you 8-10 years ago is just absolutely skyrocketing. And again, in this article, they're talking a lot about Argyle. They're talking about the Argyle tender, how high the prices were this year, how people, were shocked that the prices went as high as they did, and they didn't get a chance to even win any of the diamonds. And now what they're saying is that $1 million a carat for a diamond is now becoming normal. It's not becoming anything, that's going to shock anybody. So, again, I bought a 2-carat vivid pink Argyle tender diamond back in 2003 for $350,000. The diamond's worth close to $4 million today. So, again, those that own diamonds continue to hold them. They're going to continue to go up tremendously. One of the best investments we've ever made. For those that are looking to take some of their money and put it into something safe where they have a chance of doing extremely well, give us a call. We'll show you our beautiful diamonds starting at $15,000, going all the way up to $40 to $50 million. But again, our yellow flawlesses and Argyle pinks are the diamonds that most people are buying at this particular point.
Thank you very much, Harold Siegel, for another great show and your knowledge and time.
My pleasure. I want to wish everybody a wonderful weekend. Enjoy the Grey Cup and have a very profitable day.
We'll end on this quote from Art Cashin. He says, "The problem is that many academics have been dismissive of gold, despite its millennial history of being a storehouse of value. And they use Greenspan's old phrase that it's a barbaric relic, yet demand is always there. The people in villages and towns know they have gold, they can trust it. If you look at Europe, you can obviously see that there have been wars where people have marched in with different colored uniforms and gave you different colored money and told you it would be good, only to have somebody march in with yet another uniform and tell you that money is no good. Use this money, which is a different color." And people always found ways to protect themselves by buying things like gold and precious stones to protect what value they had. That from Art Cashin. Connect with Worldwide, wwpmc.com, and their telephone number, 1-866-623-2002. With Harold, rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.